The capital of a speculator is his kingdom. It is the sum total of his past victories, the foundation of his future campaigns, and the very source of his power. The stock market is the battlefield, a vast and dangerous landscape filled with unseen traps, false signals, and the constant roaring chaos of conflict. The 90%, the great tragic majority of traders, march into this battle with no armor, no strategy, and no plan for retreat. They are an army of hopeful amateurs destined to be overrun, their kingdoms sacked and their capital annihilated. But the master, the 10% who survive and prosper, does not leave the safety of his kingdom to chance. He is a strategist, a general, a great builder. He constructs an impenetrable fortress around his capital, a multi-layered system of defense so powerful and so disciplined that it can withstand the market's most brutal assaults. Jesse Livermore was the greatest of these fortress builders. He knew that the art of speculation was not, first and foremost, about the daring of the attack, but about the perfection of the defense. A speculator, he understood, lives or dies by his ability to protect what he has. A great victory is meaningless if its profits are given back to the market in the very next campaign. Therefore, he devoted his life to codifying the principles of capital preservation, creating a four-tiered defensive strategy that was the true secret to his longevity and his legendary comebacks. This is not a story of how to attack the market. This is the blueprint of that fortress. It is the complete four-line strategy for the defense of your capital. Before we continue, please subscribe and leave a quick comment, even one word. This small action helps the algorithm show this video to more people and tells me these deep dives are worth making. For those who are committed to this journey of knowledge, who return to these lessons to sharpen their minds after the inevitable setbacks of the market, your support is the fuel that keeps this channel going. The first and most formidable of all Livermore's defenses was not a wall or a gate. It was a great, wide, and often empty moat that surrounded his entire kingdom. This was line of defense number 1, the discipline of inaction. It is the most powerful and yet most psychologically difficult of all defensive principles. It is the understanding that the vast majority of the time, the safest, wisest, and most profitable position a speculator can take is no position at all. The amateur is consumed by a hankering for activity, a constant nagging need to be in the market. He believes that to be in cash is to be missing out. The professional knows that to be in cash is to be patient, to be prepared, and to be in a position of supreme strategic advantage. Livermore learned this lesson through years of costly impatience. He stated it as a fundamental law, a truth he had paid for with his own capital. There are times when one should speculate, and just as surely there are times when one should not speculate. The market does not offer high-probability, fortune-making opportunities every day or even every week. These great, gilt-edged opportunities are rare. They are the culmination of weeks and sometimes months of quiet, underlying preparation within the market structure. The time in between is not for trading. It is for waiting, for studying, for allowing the market to set up its next great, decisive move. This great outer moat is the speculator's patience. It is the discipline to sit, sometimes for months on end, and do nothing, while the 90% are being ground down by the meaningless, whipsawing fluctuations of an undecided market. The professional waits for the perfect 5-star setup to align. He waits for the confirmation of a great primary trend. He waits for a clear, undisputed leading group to emerge. He waits for a powerful leader within that group to arrive at a perfect, strategic, pivotal point. Until all these conditions are met, his capital remains safely within the walls of his fortress, his powder dry, his mind clear and unbiased. To be out of the market is to be in the ultimate position of power, the power of a general on a hilltop, observing the battle from a distance, waiting for the perfect psychological moment to commit his forces. Now, Livermore's defensive genius was in his patience, in waiting until the tape's behavior showed him that a clear, powerful trend was undeniably underway. But one of his great contemporaries, Wyckoff, dedicated his life to explaining what is happening during these very periods of waiting. Wyckoff's method provides a structural map of the battlefield, showing the hidden campaigns of accumulation by smart money that are the true cause of a bull market. Understanding Wyckoff is like having the enemy's battle plans before the battle has even begun. It transforms the patient wait from a passive act into an active, intelligent observation of the forces gathering beneath the market's surface. To truly understand this deep market structure, we invite you to subscribe to our new channel, Richard Wyckoff Trading Methods. The link is in the description below. Only when a true high-probability opportunity has finally presented itself, when all the strategic conditions are in perfect alignment, does the professional speculator consider lowering the drawbridge of his fortress. But even then he does not charge out with his entire army. He opens the gates with extreme caution. This brings us to line of defense number 2, the initial probe and the first stop. This is the great gatehouse of the fortress, the first point of contact with the dangerous world outside. Livermore never, under any circumstances, committed his full intended line at the outset of a trade. To do so, he knew, was to expose his entire army on an unproven battlefield. His first move was always a small exploratory commitment, a 1% probe. If his plan was to ultimately accumulate 10,000 shares, he would begin by buying a mere 1,000. This was not a timid act. It was a supremely intelligent one. It was a test, a way of asking the market a direct and practical question, with a small and manageable amount of capital on the line. Is my judgment correct? Is the time right now? This probe is the ultimate defensive maneuver at the point of entry. It is a system designed to gather information at the lowest possible cost. Attached to this probe is the first and most sensitive of all alarms, the rule of immediate profit. Livermore insisted that a correctly timed trade, made at a genuine pivotal point, must show a profit almost instantly. This was not a desire for a quick gain. It was a demand for irrefutable proof that he was in harmony with the market's immediate line of least resistance. If that initial small probe immediately resulted in a loss, it was a clear and absolute signal that the timing was flawed. The fortress gates were to be slammed shut immediately. The position was closed, the small, predetermined loss accepted without question or regret. The first loss is the best loss, he insisted. It is a small, tactical retreat, a cheap price to pay for the invaluable information that you are wrong. This is the great mechanical rule that protects the speculator from his own capacity for hope. He is given no time to wish, to pray, or to consider averaging down. The verdict of the tape is instant, and the defensive action is automatic. By adhering to these first 2 great lines of defense, the speculator has already eliminated the 2 greatest sources of amateur ruin: the impatience that leads to overtrading in an undecided market, and the hope that leads to holding on to an ill-timed trade. His capital remains protected, his mind remains clear, and he has ensured that his main forces are only ever committed to a battle that he is already, demonstrably, beginning to win. The outer walls of his fortress have held. Having successfully breached the first 2 lines of the fortress's defense, the speculator now finds himself inside the gates. He has passed the great outer moat of inaction, his patience rewarded with a high probability setup. He has successfully sent his small probe through the fortress gate, and its immediate success has confirmed that the path is clear. He is now in a profitable trade, his initial judgment validated by the market's own favorable verdict. But it is here, inside the walls, that the real battle for the kingdom begins. The challenge is no longer one of entry, but of occupation and defense. How does a general protect the territory he has just won? How does he defend a growing, expanding profit from the market's inevitable and often violent counterattacks? This is where the 90%, the amateurs, almost always fail. Having finally made a correct trade, they are paralyzed by fear. They have no system for protecting their winnings. They either snatch their small profit too early, terrified that it will vanish, or they hold on with a blind hope through the first sharp reaction, only to see their entire paper fortune evaporate. They have breached the outer walls, but they have no plan for defending the inner sanctum. Jesse Livermore, however, was a master strategist. He knew that a successful campaign required a second and even more powerful line of defense. This was the great inner wall of his fortress. This brings us to line of defense number 3, the trailing stop for the pyramid. This is the tactical masterpiece of risk management, a brilliant mechanical and unemotional system for protecting the profits of a growing position. It is designed to solve the unique and perilous problem of pyramiding, the art of adding to a winning trade. As a speculator adds to his position at higher and higher prices, his average cost rises, and his entire, now substantial paper profit becomes increasingly vulnerable to a single sharp reaction. This is where a simple static stop-loss is no longer sufficient. A dynamic, intelligent, and adaptive defense is required. Livermore found the perfect embodiment of this principle not in his own inventions, but in the simple mechanical genius of a professional gambler named Pat Hearn. He was so impressed by its ruthless efficiency that he immortalized it in Reminiscences of a Stock Operator. Hearn's method was a perfect fusion of aggressive offense and impenetrable defense. As he added each new lot to his pyramid, always at a higher price, he would immediately place a stop-loss order for his entire position at a single critical price, 1 point below the price of his most recent purchase. Let us examine the simple, beautiful, and powerful mathematics of this. Imagine Hearn buys his first 100 shares at $50. The stock advances and he buys his second lot at $51. He now owns 200 shares. His stop-loss is not placed below his original entry at $50. It is placed at $50, exactly 1 point below his last purchase price of $51. The stock continues to climb. He buys his third lot at $52. His stop for all 300 shares is now moved up to $51. He buys his fourth lot at $53, and his stop for all 400 shares is now moved to $52. The result of this system is a moving, impenetrable wall of protection that marches up behind the speculator's profits. At any given moment, the only capital truly at risk is the small 1-point margin on his very last purchase. All the profits from the earlier lower-priced purchases are locked in, shielded by the trailing stop. A sudden sharp reaction in the market, the kind that so often wipes out the hard-won gains of the undisciplined trader, could not touch him. He declared with the cold logic of a professional gambler that he did not see any sense in losing more than 1 point, whether it came out of his original margin or out of his paper profits. The true power of this third line of defense, however, is not just mathematical, but psychological. It is a system designed to completely remove the speculator's greatest enemy, his own emotional indecision, from the most critical part of the trade, the exit. For the average trader, the decision to sell a winning position is an agonizing one. His mind is a battlefield of greed and fear. Greed whispers to him to hold on for just a little more, that the top is still far away. Fear screams at him to sell now, that the profit is about to vanish. He is paralyzed, caught between these two powerful, conflicting emotions. Pat Hearn's rule eliminates this internal conflict entirely. The decision to sell is no longer a matter of opinion, feeling, or guesswork. It is a mechanical certainty. The rule is the rule. If the stock reacts by 1 point from the level of his last purchase, the position is closed. There is no debate, no hesitation, no room for the corrosive influence of hope or fear. The action is automatic. This frees the speculator's mind to focus on what truly matters, identifying the next great opportunity, not agonizing over the management of a current one. It is the ultimate expression of trading discipline. The cautionary tale of the trader named Roberts, as told in Reminiscences, is the ultimate proof of this rule's power and the catastrophic cost of abandoning it. Having used Hearn's system to make a fortune of over $100,000 in Lackawanna, Roberts grew overconfident. He believed he was now a master, that he no longer needed the rigid mechanical constraints of the rule. He entered a new trade, and when a reaction came, instead of letting his 1-point stop take him out with a massive profit, he let them run as though they were profits. He had fallen victim to hope. He had abandoned the mechanical certainty of his rule for the emotional gamble of a guess. The result was inevitable and swift. Of course, every cent went, the story concludes. Before the middle of September, he was not just broke. He was in debt to his brokers. He was a man who had held a fortune in his hands and had let it slip away because, in a moment of arrogant self-deception, he had torn down his own inner wall of defense. His story is a chilling reminder that a rule is only as powerful as the discipline to follow it without deviation. This third line of defense is not optional. It is the very price of survival. The campaign is now at its zenith. The speculator, having followed the first 3 lines of his defensive strategy with unwavering discipline, finds himself in command of a great and profitable position. He waited with patience behind the outer moat of inaction. He tested the market with a cautious probe through the fortress gate. He has built a magnificent pyramid of profits, all protected by the great inner wall of a mechanical trailing stop-loss. His kingdom of capital has not only been defended, it has expanded. But it is here, at the moment of maximum paper profit and supreme confidence, that the final and most insidious danger appears. The danger of overstaying one's welcome. How then does the master speculator know when the war is won and it is time to retreat with his treasure? This brings us to the 4th and final line of defense in the Livermore fortress strategy. This is not a wall to be defended, but a clear and decisive signal for a strategic retreat. It is the citadel of the fortress, the final stronghold from which the general gives the command to abandon the field, not in defeat, but in a moment of calculated strategic victory. It is the art of recognizing that the great trend has run its course, and that the time has come to convert a magnificent paper fortune into cold, hard, and permanent cash. The first sign that the great bull campaign is nearing its end is the failure to rally. This is the earliest warning, the first symptom of sickness in a trend that was once so powerful. Livermore knew that a healthy bull market has a distinct rhythm. It advances, it has a natural reaction on lighter volume, and then it resumes its advance to a new high. The failure to rally is the moment this healthy rhythm is broken. After a reaction, the stock attempts to recover, but the rally is weak, anemic, and most critically, it fails to surpass the previous high point. This is a profound and ominous signal. It is the market's own clear announcement that the great buying power that once propelled the advance is now exhausted. The upward force is spent. The line of least resistance is no longer pointing upward. To the professional, this is the first great warning to become cautious, to cease all buying, and to prepare for a strategic withdrawal. To hold on past this point is to substitute the treacherous emotion of hope for the clear factual evidence of the tape. This brings us to the final, absolute, and non-negotiable signal for retreat. This is the ultimate stop-loss for the entire campaign, the mechanical trigger that removes all doubt and all emotion from the final exit. It is the decisive break of the reversal pivotal point. In a great bull market, the lowest point of the last natural reaction becomes the final and most critical line of support. It is the floor upon which the entire advance rests. As long as the price remains above this level, the trend, while sick, is not yet officially dead. But the moment the stock declines and decisively breaks below that previous reaction low, it is, for Livermore, a signal of the highest order. His rule was precise and mathematical. The trend was only officially reversed after the stock had declined by 3 or more full points below the low of that last great support level. This was not a minor dip. It was a catastrophic failure. It was the market's own declaration that the sellers had finally overwhelmed the buyers and that the primary trend had turned from up to down. When this signal was given, there was no room for hesitation. It was the final command to liquidate the entire position. These four lines of defense then form a complete, symbiotic, and profoundly logical system of thought. It is a progression that governs the speculator's every action, from the moment he first considers a trade to the moment he finally exits it. It begins with line of defense number 1, the patience of inaction, the discipline to wait for the perfect setup. It moves to line of defense number 2, the cautious probe and the first stop, the low-risk test of the entry. It evolves into line of defense number 3, the tactical trailing stop, the mechanical shield that protects a growing pyramided profit. And it culminates in line of defense number 4, the strategic retreat, the signal-based exit that ensures the speculator leaves the battlefield with his kingdom of capital not just intact, but greatly enriched. This is the mind of the defender. This is the mindset of the professional. He is not a gambler, hoping for a lucky break. He is a strategist, a business manager, a man who understands that his first and most important job is not to make a profit, but to protect his capital. His every action is governed by this single prime directive. His fortress is not built of stone and mortar, but of patience, of discipline, of mathematics, and of a profound, unwavering respect for the power of the market. This, then, is the ultimate conclusion. The Livermore fortress is a mental construct, a system of discipline that, if followed with unwavering fidelity, guarantees the one thing that is essential for all long-term success: survival. The speculator who masters these four lines of defense is a man who can withstand the market's most violent storms, who can survive his own inevitable mistakes, and who will always be present, solvent, and psychologically prepared for the next great fortune-making opportunity. It is the methodology that transforms speculation from a game of chance into a winnable professional business. To truly understand the mind of the man who devised this fortress, it is not enough to simply know the rules. You must see them in action, under the immense pressure of real-world combat. For this, there is no greater chronicle than Edwin Lefebvre's 1923 masterpiece, Reminiscences of a Stock Operator. This is not a mere biography. It is the military history of the greatest speculators' campaigns. Lefebvre did not just write a story. He documented the tactics and strategy in the heat of battle. This book allows you to stand beside Livermore as he defends his capital during the panic of 1907, as he attacks during the great crash of 1929, and as he makes the very same catastrophic million-dollar mistakes that taught him these profound defensive principles. It is, in essence, the art of war for traders. For those truly committed to this deep study, we highly recommend the edition, which includes a unique, detailed chapter-by-chapter analysis by Max Davidson. This analysis acts as your co-pilot, translating the century-old battlefield wisdom of the text into a clear, actionable roadmap for the modern trader. A link to this essential edition is provided in the description below.